Okay, good morning, everyone. Um, Happy holiday. We are right now on the day two and the very last day of uh, our training. So I welcome all of you, and I hope you are enjoying your holidays. Um, we are still on our QuickBooks Desktop Accounting Training. So today we are looking at basically how to post. The whole of yesterday, we have to use it mainly for setting up our company. And that process I showed you yesterday, you can use it to set up any company on QuickBooks. That process I showed you yesterday can be used to set up any company on QuickBooks. Okay. Now, the essence of this training is to make it very easy for you. And on your own, you can get this stuff done. Okay. Good morning once again to all of us. I want to be sure. That the equipments are with us. Can I get a sign? If you are hearing me very well, just type in clear so that we can get going. Okay. Are you hearing me clearly? So, are you hearing us? If you're hearing us, please indicate, show that you are hearing us. That's good, Mr. Jeremiah. Welcome on board. Thank you, and I hope you are having a swell holiday. Sorry, I have also got some of you people's holiday. I've got some of the holiday short. Okay, we'll just do a recap. We'll just do a recap of yesterday's class. Okay, then we can now start proper. My target today is in the next 1 hour, 30 minutes, we'll be done with the posting. The major thing, the most difficult thing when it comes to accounting software is the setup. You know, the more complex the operations of that company is, then the more ready you have to be for a battle ahead. The setup takes basically 70 to 75% of everything about that company. So the tech setup is the key to everything. My assurance this morning is that my setup yesterday was cool and clean. So I'm very optimistic that my report will be the exact mirror of this business. So without much ado, I'm going to share my screen right now so that we can just start this in full. So I'm sharing my screen. Okay. Okay. Can you see my screen? Those that have joined us, can you see my screen? Please indicate if you can see my screen. Good. Thank you, Mr. Jeremiah. Okay. Yesterday, we started from creating a company on QuickBooks. And okay, fine, good. You can see my screen. That's good. Okay, so we started by creating a company. So after creating the company, we have to do some preference, do some adjustments, do some defaulting, removing the default that the software came with, replacing it with our own default. Please, before I continue, I want to ask, is there anyone among us who missed yesterday's class so that let me carry you along? Do we have somebody indicates if you have missed yesterday's class due to the network problem we had? If you have missed yesterday's class, please let me know. Indicate by typing so that I can do a recap before we start posting transactions today. Do we have anyone in our midst who missed yesterday's class? Do we have anyone? Okay, so I think we can go ahead. We can go ahead with today's class. But just in case you are just coming in and you have missed yesterday's class, please do well to notify me. But the fortunate thing is also the video of yesterday's class is already on the YouTube channel, on our the YouTube channel. And there are also specific videos that I broke down, so you can take your time, rewatch it. It's a simple video. Once you get it done, then you can always connect with this second video we are making. Then another thing is that, please, everyone who has participated in this training and you are part of our WhatsApp group, please, you are entitled to a QuickBooks software that you will use for your practice. Every training we conduct, we make sure that students access the software. We'll send it to your email. You install it on your system, following the process we've already had on our page, the procedure. Then you can use it to practice in order to perfect on how to use this software. So please do well to join our WhatsApp group and drop your email there. Then you will get your own copy. Okay, so having said that, yesterday we created a company, we created our charts of accounts, we entered the customer names, vendor names, and employees' names. We did a lot. We created the VAT, we created the items, and linked them to their respective accounts. So today it's about posting. We want to post the transaction. So I'm sure you still have your case study. Please, if you have it, I've pasted it on our YouTube page, our computer accountant. It's also on our WhatsApp page, computer accountant. So, but in case you don't have it, please, when you are sending us your email, please indicate that you need a copy of this so that it will come with your software. So if you have it, then we can now zoom in properly. Okay, now from the first, it says Sky International is a dealer in clothing business. He started business with the following investment, what you can call opening balance or beginning balance, or a balance brought in. So he has a cash balance of 500,000, and he also has a bank balance of another 500,000, making it a total of 1 million naira capital. Okay, now if you noticed yesterday when we were creating our medium of payment, which is cash at hand and cash at bank, we were able to put in the beginning balance, that is the 500,000. So I'm going to show us that this money is already in the system and it has hit our balance sheet. Let's go back to list. Select chart of account. Now look at it here. You can see it says cash at hand 500,000. So we didn't put for global bank, so I can quickly do that. You click on global bank, edit, and go to edit account. So under opening balance, so this is it. This is you started yesterday, which is on the 11th. So on the 11th, we brought in 500,000 as cash at bank, and yeah, save and close. So you can see, look at the breakdown now. You can see we brought in 500,000 naira cash, 500,000 naira in the bank. It gave us a capital base of 1 million naira. This is one of the fastest way to get this information come into the system. This is one of the another way to do it is using the journal, which I'm going to show us right now. In case in the process of creating your charts of accounts, you couldn't use this medium, which is the fastest and I feel it is the most easiest, because it doesn't allow you to pass through debit and credit. Now, in case such a thing happens, you can now use journal on the alternative. So how do I use my journal to still achieve the same thing? Watch me. You go to company menu. You go to company menu, click on company menu, and select make general journal entries. So that is it. So once you come to journal, the double entry mechanism or the double entry system is your responsibility. You will be the one to decide what to debit and what to credit. So in this regard, both cash at hand and cash at bank are all assets. And every asset, once asset increases, it is debited, right? Then once it decreases, it is credited. And once capital increases, it is credited. Now, so what you do is you come here, select cash at hand. Watch, I'm not going to pause it so that it doesn't duplicate what we have done already. Watch. Then global cash, global bank, sorry, we have 500,000 there also. Now, both of them, do you see what the software is doing? Both of them will give us a total of 1 million naira. So what I will select here would now be my capital account. That is it. Then as a good accountant, you know, one thing I normally tell accountant is that there's a journalism part of accounting, that is the narration. Every good accountant must understand the power of narration, the power of storytelling. So don't just post without storytelling, because on the day of the audit, there will be nobody to help you. The auditor cannot help you to explain what you should have done in writing at the earlier stage. So make sure that you describe what you are doing, being beginning balance for the period and the period starting this. So you have to I'm not typing it, but I'm just giving you must, so that QuickBooks will have an enriched data. As I'm looking at your figure, I'm also seeing your description. So I can, from your description, I will understand what the money is actually for. So this is it. So you make your description, describe for the bank, and describe that the total of these assets gave us this equity balance, and we are good to go. So the next thing you do is to click and close if that is the only thing you are doing, or click and save if you still have more things you have to post. So I'm not going to save this, so that we already have it in the system, so that we don't duplicate our opening balance. So I will close it. I will exit from here. So if you don't follow the opening balance in the while you are creating the chart of account, you can comfortably do it in the journal. It's the same result you are getting. The difference is that in the journal, it is you that will decide what should be the debit and credit. But on the other side, you give the software the value and the date. The software knows what is debit and what is credit. It has been configured to just behave that way. So I'm exiting. No, I'm not saving it. So good. Okay, so that means that the very first question, the beginning balances, we have taken care of them. Okay, they have been taken care of. We have taken care of the beginning balance. So what is now left is the next posting. Here it says his transactions for the period, vendor transactions first. Have it at the back of your mind. We have already entered the names of our vendors yesterday. So when you watch the videos, you see all this things. So that I want us to hit that 1 hour 30 minutes mark. Okay, and we end so that we can go and enjoy our holiday. I still have like 3 more classes, physical classes, before I will go home. Okay, so look at the first question here. It says Sky International, he bought 100 handbags. Sky International bought 100 handbags on credit from Morgan Designers at 500 each. Sky Investment bought 100 handbags on credit from Morgan Designers at 500 naira each. Please, I want to carry everybody along. Are you still hearing me? Am I audible enough? Are you seeing my screen? Please quickly indicate, so that we are now on the critical part. Please, are you still hearing me? Indicate, and are you seeing my screen? Okay, thank you, Mr. Joaquin. Okay, thank you, Mr. So let's move. Okay, now Sky Investment purchased 100 handbags on credit. Please note that word, on credit, from Morgan Designers at 500 naira each. Now, anytime you make a credit purchase from your suppliers or vendors, as the case may be, you go to a vendor menu, drop down from vendor menu and select enter bills. Select enter bills. This is it. So this is where you enter every credit purchases from your suppliers or vendors. So this is it. So the implication here is that the system will generate account payable. So that means you are owing Mr. Morgan. So once the bill opens, okay, you go to where you have vendor, click on vendor. Please follow me very well. Then select the vendor's name, which is Morgan. Today's date is 12th. You change the date to 12th. Okay, good. Then this is the more like the due date. The 22nd date, yes, is more like the due date, right? So we don't need it. Now watch this. There are only two levels of service you can enjoy from your vendor. There are two levels of transaction you can enjoy from your vendor. It's either you are enjoying services from your vendors or you are enjoying products. It's either you are buying items from a vendor or you are enjoying that vendor's service. Okay, good. Now, if you watch here, you see that the software has two folders. You will be the one to make a choice of what this transaction is all about. Is it service oriented or item oriented? So from here, it is item oriented. Watch now, I'm going to click on item, right? Good. Now, if you click on item, what it does is that it will open the columns that will capture the information about those items. It opens the column. If you click on expenses, the column shortens. So all you have is account and amount. Okay. But if you click on items, because items requires the name of the item, the description, the quantity, the cost, and everything. So you have more columns to take care of that transaction. So what we are buying is handbag. So I'll go to item and select handbag. Did you notice something? That the software has filled in other important columns for me. You know what? It's coming from our yesterday's setup. That is why I keep hammering on setup. It's coming from yesterday's setup. So once you call up an item, the software will give you those important information about that item, right? Now, how many quantities are we buying? From the question is 100. So I'll type 100. Click tab on my laptop. It gave me 50,000. I don't want to use our currency because people from other places are watching. So 50,000 is what I have. 100 from 100 handbags. I'm good with this. I'm good. Then I'll save it. Save and close. Yeah. This is it. Perfectly done. Perfectly done. Okay, good. The second question says, got on credit again, another credit purchases. A supply of 50 suits from H Tailors at 700 naira each. The same procedure, you go to vendor menu, okay, and it might interest you to know that in that vendor menu, it contains both the database of the customers and all the transaction features that you use of the vendor and all the transaction features that you will use to enter the vendor's transaction. So I'll select enter bills again. That is where you enter all credit purchases. So the name of the vendor this time around is Edge Tailors. Good. So the date is constant. So one thing I like about QuickBooks is that once it figures out your content, it keeps them permanent for you so that you do lesser work. Then on the item, what we are buying here is suits, 50 suits here. Okay, one quantity 50. Okay, so giving us a total of 35,000 naira. I'm good to go. This is more like writing your receipts, so the vendor has given you his invoice, so you are now entering the content of the invoice in your QuickBooks. Okay, now as these things are being saved, reports are generating immediately. That's why we call it real time. Okay, so your only job here as the user is to make sure that everything is garbaged in perfectly. Everything is garbaged in perfectly. That's your job. So save and close. Yeah, this is necessary. Has gone in. Then the third purchases Sky is making, it says bought 30 shoes on credit. Bought 30 shoes on credit from King Joe at 1,000 naira each and paid by check for 25 pairs. Note that this is part payment purchases. Okay, you bought 30 shoes from the vendor actually supplied 30 shoes. But at the point of purchases, you are making payment for 25. That is part payment purchases. Now, follow me very well. I'll go back to vendor. Okay, go back to vendor. You click on your vendor and select enter bills. Remember, the first reality that it is the goods were supplied and you have made part payment. So that means you are still owing. So we are now in the place that will capture the remaining balance unpaid. So the name in this is King Joe. Okay. Then we just bought shoes. Quantity is 30 first. Okay. So it gives us cost. Now you can see that my cost is not showing. You know why? We skipped it yesterday in the setup. I thought you skipped it yesterday, so I can equally put it here. I intentionally did that so that we don't fully automate. And maybe in practical terms, when you'll be doing it on your own and you didn't see the figure, you feel that it's not. No, even if you miss putting a price in the setup, you don't need to bother yourself. The most important thing is where we are right now. So 1,000, right? Is it 1,000? Yeah, 1,000. So the value of those shoes is, you can see the system is asking, do you want this amount to be, updated on that platform? Yes, I want it. So it's giving me 30,000 naira, right? Good. Now, the other layer of the question said you paid by check for 25 pairs. You paid by check for 25 pairs. Okay, now look at the movement of my mouse. Okay, the total value is 30, right? I want to capture that 25,000 we've paid. You go to where you have pay bill feature. This is where the 25,000 already paid will be captured, right? So you click pay bills, whatever it pops up, just click yes. You're on a good, you are good to go. Okay, now you can see that information is already here. So what do I do now? The total value is 30,000, but I just paid 25 pairs, which is 25,000. So I'll clean up this and replace it with 25,000. So the implication is that I have 5,000 unpaid bill, okay, accruing to King Joe. Then you come down here, follow my mouse. Want to send the figure? You come down to the medium of payment. We paid him by check. From the question, by check, right? So I will drop down and select Global Bank. Okay, so I don't like seeing this, so I don't want it to pop up again. Thank you. So we select enter the amount, okay, then move down to the medium of payment used in paying King Joe, which is we gave him a check that went through our bank. Then that is the global bank. Finish. So pay selected bill and pay bills. So you can see we are done with the vendors. We are done with the vendors. You can even hear it's showing you the balance remaining. We are done with the vendors. So everything is sorted out in the vendor. Please let me also put this across to us. This is a beginner proficiency level. With this knowledge, you can comfortably manage a business of this nature. But we also have our masterclass training that takes you around different types of businesses: NGO, construction, manufacturing, retailing, departmental stores, consulting, different types of business, restaurant, saloon, different types of business. So that's what we're doing. The masterclass is dynamic and broad, and it's not only how to run a business, how to troubleshoot, how to network multiple systems to use, the same software. Okay, so a lot is done in the masterclass, but with these, you can still figure your way out comfortably. Okay, thank you for being there. Please don't forget to encourage us. Don't forget to subscribe. Don't forget to comment, like, and share so that it gets to as many accountants, as many people who are in our field as possible, so that they can benefit from these ideas. And I also want to chip in here that in the next 2 weeks from today, we are going to, our training will be on Sage 50. Sage 50 quantum accounting software. Okay, so thank you for being there. So let's go to the next version of the transaction, customer transaction. So Sky Investment has made purchases. He has brought in the products. Now it's about time he starts selling. He now wants to start selling those products. Okay, so I'm going to move away from the vendor platform. Okay, good. Now, the first sales made to a customer is 90 handbags. Sky Investment sold 90 handbags at 1,000 naira each to Kef Fashion House, a customer. The underlining word there is on credit. He sold 90 handbags on credit to Kef Fashion House, right? Good. So I'll go to customer menu and select create invoice because it is a credit sales. So the implication is that since it is sold on credit or it is sold on trust, it is sold based on the integrity and relationship we have with Kef Fashion House, we will raise an invoice. The invoice reminds him that he's liable to us to the tune on that invoice, to the amount on that invoice. So you click on create invoice. Good. Okay, so in the customer name, you select Kef Fashion House. The date is already there, which is today's 12. So once your system date, you can see your system date here is correct, the software picks your system date automatically. Okay, now quantity. What's the quantity of handbag? 90. Then you go to the name of the item is handbag. Did you notice that? Based on the yesterday's setup, all I need is to give the software the quantity which it doesn't have and the name of the item. The software does the remaining calculation. Okay, now from the question, it says every item is subject to 7.5% VAT payable to the tax authority, right? So where is my VAT? Look at where I am. This is the VAT. You drop down from here, drop down and select VAT. Automatically, VAT inclusive, it calculates. So the total becomes 96,750. So 90,000 to the company, 6,750 to the government. Okay, so our duty is to act as a tax registrant on behalf of the government. So we'll collect the tax on behalf of the consumption tax on behalf of the government. So what he's now paying us is 96,750, and we are good. Okay, so save and close. Yeah. So the second question says, Sky received check for 40 pieces of suit sold to Zenith Garment at 1,200 naira. The underlining word there is that we received. It is not on credit. That means that Zenith Garment gave us a check in favor of the items in favor of the suits he's buying from us. By receiving the check from him, it is assumed that Zenith Garment has paid us in full. All we now have to do is to go to the bank and clear the money. So the check is a monetary mechanism that shows that payment has been effected, okay, through a third party, through his representative called the bank. Good. So I'll go to now, watch. He has paid us in full because we have received check. So you go to customers and select enter sales receipts. Enter sales receipts. Okay, good. So you can see there's a difference between create invoice and enter sales receipt. Create invoice means it's on credit. It was purchased on credit. Then enter sales receipt means that the customer has paid us in full. So we pick the name, Zenith Garment. Okay, now watch me. The name is settled, right? Now, how did he pay us? He gave us a check that will send this money to our global bank, right? So it's assumed that the money is going straight to our global bank, because once we present the check to his bank, to his financial representatives, they will move the money to our global bank, right? Good. Now, what did he buy? He bought suits, then totaling 40. So the total amount we are going to receive from him as ours is 48,000. So we now add VAT to it. This is VAT. That is giving us a total value of 51,600. So 48,000 for us, 3,600 for the government. Okay, so our business with him is done. So save and close. So a normal day, I can finish posting everything here in less than 10 minutes, because so that's years of experience. So, but with this video and what you'll be doing on your own practicing, you will still there's no place where they teach how to be fast. Is a natural phenomenon. When you keep doing the same thing, speed naturally flows in. Okay, now this next transaction there, Sky sold 25 shoes at 2,000 naira each to McDave Boutique and got paid by cash for 22 pairs. So another part payment. A customer is paying us in parts. That's why in real life, there are three businesses. There are three means of businesses. It's either you are selling on credit, or you are selling in full, or you are selling in part payment. You are selling in part. So it's either your business is credit business, full payment business, or part payment business. Virtually every business is like that. Even government business, sometimes you are part paid. So okay, so let's capture that transaction. So I will remember it involves debt. He did not pay all. Therefore, there's a certain part of that transaction that is a debt against him. So we go to create invoice. Okay. Then select McDave Boutique. Okay. Quantity is 25. That's the overall quantity. And the item in question is shoes. So you can see I didn't affect the price yesterday. I intentionally left it so that you can also put it here. So it's not a must that you must have to put price in the setup. No. You can also leave it, then do your price in it because price changes. Okay. But even that one we put in yesterday in the setup is just mere data. It's mere data. It doesn't influence anything. The only thing that it helps you when that item is called up, it helps you to calculate the item, the quantity against the price. But even if you don't put it, you can do it here. You will still get the same total, which is 50,000. Okay, then we'll add VAT. Then it gives us 53,750. 53,750 naira. Good. Okay, now the second layer of that question says he paid for 22 pairs. Out of the 25 pairs, which is the total value of the transaction, he's paying for 22 right now. So look at my mouse, you move to where you have receive payments. Okay, good. And select yes. Good. Everything is moving smoothly for us. Okay, that's it. Now, this is where I will effect that payment, right? So he's paying us through cash. It's not by bank. So he's giving us the money cash. So I'll drop down from here where it says deposit to. I'll drop down and select cash at hand. Okay. Then how much is the 22 pairs? So 22 by 2,000 will give us 44,000. Okay, you see that? It will give us 44,000. So once this is done, you can now save. So something is blocking my save platform. So I have to minimize the window to get it. So you can click on save. So the system calculates automatically. So it's owing us some amount. Save. Let me get to my save button. So I have to remove my tax bar because the save button is down, so it's blocking it. So I have to use tab to get where the save button is. So I have to use tab. So because I have to share my system, so it has blocked the. Okay, so it's here now. So I've opened it. So I've widened my platform. So is this what I wanted to see? Save and close. Okay. Because I've shared my screen, so it's reduced the size of the screen. Now you can see that, watch this now. It has brought me back to the invoice. So I have the total amount, the part payment he made, which is 44,000. So you can see the balance remaining. So what is now owing us as debt is 9,750. If you look at the McDave navigation bar here, you can see that it's also explained in detail. The total value of the invoice is 53,750. He made a part payment of 44,000 and he has an open balance of 9,750. So I'm done with this. Save. Excellent. So we have one more customer left, and it says sales by cash, 5 handbags. You know, I told us yesterday, when you go to departmental stores, when you go to fuel stations to buy, to refill your car or to buy items, you notice that they hardly ask you who are your name, okay? But they print out your receipts and you move on. You are seen as an on-the-fly customer. So most businesses run that way. Most businesses run as on the fly, especially departmental stores. Okay, even normal business can keep a data of some customers, some major customers, and other customers. It runs them as on the fly. That means your transaction is one-off transaction, and the implication means that an on the fly customer is not entitled to credit sales because there's no relationship between the customer and the business. Okay, so that is the essence of this last question. Sales by cash, 5 handbags. So he's still a customer, but on the fly. So I'll go to customer. And in that, in the implication also is that he pays in full. If a customer who I don't have any relationship or on the fly comes, when you go to departmental store, you don't buy on credit. You don't give them part payment. You pay in full. So I'll go to enter credit sales receipt. Enter sales receipt. Now, the name of this customer is not in our database. The name of this customer is not in our database. Okay, so what do? Watch here. I can now use a generic name, customer. Okay, then you have handbag. How many is he buying? 5. Then advert to the whole stuff. So he's giving us 5,375. Okay, so save and close. So the money goes. Now watch. You see, if I have left now, we will have sent this money to a wrong account. The money is cash. He paid cash, so not by bank, right? So I'll drop down and select cash at hand. So these are little things you have to pay attention to. How was the transaction paid? How was it contracted? Is it on credit? Is it on full payment? Is it on part payment? How was it paid? Is it by bank? Is it from cash at hand? Is it from petty cash? These are little details you must know. If not, you notice that sometimes you now see that what is paid by cash, you have erroneously sent it to bank. Your balance sheets will not be accurate. So that's why I keep hammering. Accounting is the mirror, or I can add another one, is the clean mirror, is the immaculate mirror through which every business sees itself. Because if your mirror has some fog on it, if your mirror is not clean, or has some dirty patches on it, when you look at your mirror, your face will be distorted on the mirror. Your mirror will not give you accurately who you are. But when your mirror is clean, it's immaculate, it gives you exactly who you are. So accounting, that is how I have defined accounting from the university days. So accounting is that clean mirror through which every business sees itself and its financial realities. Okay, so I'm hitting this to go in. Yeah, and we are good. We are done with audit sales. Now let's go to everyday transactions that go on within the office, most especially expenses. Okay, transfer of money. So we don't have enough money in the office. Your boss directs that some money should be moved from the bank to the petty cash so that we can continue running our operation, and the other expenses that might occur. But before that, the next question says, Sky paid the following vendors. Remember, we have bought from them on credit in a certain day. I'm just using a real life scenario. Now, maybe after 10 days, 5 days, 30 days, 60 days, as at agreed, or the vendor has started demanding to be paid. Now we are about to pay some of them that we are owing. Okay. So the first on the list there is Morgan. We are paying Morgan Designers for 95 handbags. Remember, we bought 100 handbags. So out of the 100, we are paying him for 95 right now. So you go back to vendor and select now pay bills, because we are paying. Pay bills. Good. Okay, so who is on the line? Morgan Designers 95 handbags by check. So I'll select Morgan Designers. Okay, good. And he's being paid by check. So it goes to our global bank. So how much are we paying Morgan Designer? 47,500. So I'll clean up. This is the amount we are owing, 50. But out of this 50, we are not paying in full. We are doing 47,500. So good. Excellent job. So done. The next person on the line is Edge Taylors. We are owing Edge Taylors 30,000 and we are also paying him 30,000. That means we are paying in full. You go back to vendor and select pay bills again. So it's all about paying. So you select Edge Taylors. So out of the 35, so it's 35, we are paying 30. Good. So, and it is by cash, not by bank. We are paying him by cash. So you drop down from account and select cash at hand. Good. And pay selected bills. Okay, Mr. Opayemi is asking, where is my office located? Okay, I will type in that at the end of the class. We are in Wuse Zone 5, Abuja here. That's where the training is being transmitted live on YouTube. Okay, so it's Wuse Zone 5, but I will send you the address, Mr. Opayemi. Okay, now this is done. Then the next person to be paid is King Joe. Now, in real life, it's not a must that all of them will be paid in one day. So different scenarios, different demands. But for our case study here, everything is going in today. So King Joe, we are paying King Joe for the remaining 5 shoes. If you remember, then you go back to vendor and select pay bills again. So this is King Joe. His money is off our radar. So then it is by cash as well. We are paying King Joe by cash. So pay selected bill. Done. So all the vendors at present has been taken care of. Okay. So the next people, remember, in normal business, as you are paying your vendors, your customers are paying you. You know, money is all about money in, money out. It keeps, our capital keep recycling itself and it keeps turning out our profit. So we are paying our customers right now. So the first person on the list is McDave. So McDave Boutique, we are paying him. Remember, we are owing him 9,750. So out of that 9,750, he's paying us in full, and we are giving him a discount of 1,000 naira. We are giving McDave Boutique a discount of 1,000 naira. So how do I capture a customer's payment when it's coming in? Remember, this payment is not full payment. It's part payment made at the beginning. It's coming from a credit sales. This payment is coming from a credit sales and part payment as well. So I'll go to customer menu, right? Okay, click on customer menu and select receive payment. Where are you? This is it here. Look at it here. Click on customer menu and select receive payment. We are receiving money from earlier transaction. It can be invoice transaction or part payment transaction. Okay, so receive payments. That's where we are. So I'll click. So who is paying us first? McDave Boutique. So you come from, you select his name from here, McDave Boutique, and he's paying us by check. Very important. You have to read the question very well. By check, right? So I'll drop down from here, drop down and select Global Bank. Now you can see that what we are owing McDave is 9,000. I don't like seeing this, so 9,750. But in the process of him completing his payment, we gave him a discount of 1,000. So what we are expecting from him is actually 8,750. So how do I capture? Remember, discount allowed is part of a prudence law. Prudence law says make provision for all possible losses. We are losing money. We're supposed to have our 9,750 in full, but because of business, incentive and managerial rule of thumb, we decided to give our customer an incentive. But that incentive is coming at a cost to us. So prudence law says we must capture it. So that's why we have to expense the money through our expenditure structure. So you go back to having selected this, right? You click to show that this person is being zeroed out. You now go to look at this. You click on discount and credit. Discount and credit, right? You drop down, click on discount and credit. So how much discount are we giving him? 1,000. Then you link it to the discount allowed account under expenses. Job perfectly done. So click OK and save anywhere. Did you see the breakdown? Look at the breakdown here. Look at the breakdown. You can see the breakdown. What we were formerly owing was 9,750. Now we discounted 1,000 to him, which we will expense through our expenses. Then what is actually coming to us as cash, as check, is 8,750. So excellent work. So save and close. Okay. Okay, fine, good. I can see that from the messages, the voices are clear. So let's now go to the everyday transactions, everyday things we do in the office, everyday transactions. Okay, so paying for different expenses and different transfer of money from here to there, the business owner making drawings for personal use and the rest, paying salaries, then remitting our VAT to the tax authority. So that's what is remaining for us. Once again, my appreciation to everybody who has supported us, who have always been part of our lectures. I thank you and hold you in high respect. Please don't forget to subscribe. Don't forget to share. Don't forget to comment. Don't forget to like and invite friends. Get your colleagues, those who might need this as well. Get the message out there as far as you can. Thank you once again for being with us. It might interest you to know that in the next 14 days, we'll be looking at Sage 50. We want to take a break from QuickBooks. This is the second time we are doing it. We'll be looking at Sage 50 and how to use Sage 50. Then you can now see the difference. You can now see why companies say, no, I don't want QuickBooks, I want Sage. Or some say, no, Sage 50 is the best. QuickBooks is for small business. It depends on your level of creativity. If technology is all about creativity, if you know how to be creative, technology will be a perfect tool in your hand. If you are using technology the way it is expressed in the manual, then it becomes a manual journey as well. But if you add some level of creativity to the usage of that technology, you enjoy technology. So thank you very much for being there. So let's go. Other transactions. These are more like internal transaction by Sky Investment. So the first one, it says withdrew cash from bank for office use. Every business, we see this all the time. Sometimes the petty cash is going down. There will be an approval given for money to be withdrawn from the bank to be used in running the office. Please, accountant, don't be afraid of expenses. Expenses is a blessing. I can bet you, as long as you are a business, this webinar we are doing, yes, we are doing it for free, but it has cost us time, money, and stress. You understand? So as long as, and for us to get to you, we have to expense our way to you. Okay? As long as you are not ready to expense as a business, that business will struggle. Can you now imagine a company like Coca-Cola spending close to $10 billion on advertisement alone? So that's how you see Coca-Cola every part of the environment. If any part you turn, you see Coca-Cola's billboard. They are paying the media, they are paying individuals, they are paying traders, distributors to have Coca-Cola displayed everywhere. So that's how that 10 billion gets to Africa, to blessing. For a business to move forward, you can see that I have a light, there's light, there is AC running. I have to expense my way. If not, I'll be in the dark. And I'm sure most of you will not want to watch watch me operating from the dark. So let's move in. So we are withdrawing 100,000 from bank for office use. Please, one more time. I hope I'm loud and clear and everybody is seeing my screen. I hope I'm loud and clear and everybody is seeing my screen. One more time, please chat me up and let me know that I'm on the right path. Please chat me up. Is the sound loud and are you seeing my screen? Please chat me up so that we can run. Okay, Mr. Kola, thank you very much for your reply. So I'm good to go. Thank you for that blessing. Okay, so we drew cash from bank for office use. So the business is moving cash from the bank to the office for further use in running the business. So this is where journal come in. There are two ways to do it in QuickBooks. I'm going to show you the two ways. Number one is using a journal. Number two is using what we call transfer form, which is more faster. Okay. Now let's go to journal. You go to company menu and select make general journal entry. So remember, anytime you come to journal, the double entry is your responsibility. The debit and credit is your responsibility. Okay, so if you do it wrongly, it will show in the report. Now, our basic accounting terms: debit the receiver, credit the giver. So the bank is giving to cash, so we debit cash. So you select cash at hand, 100,000. Then cash at bank. You see what QuickBooks does. It understands how to do the second leg. Then please, narration is important. You narrate what has happened, being cash withdrawn from bank for office use, or being cash, whatever is the approval says. That's what you put in under memo. So this is one way to do it using journal. You debit the receiver, credit the giver, and you save. But I'm not going to use this platform. Okay, I'm not going to use here. Another shortcut is you go to banking menu. You go to banking menu and select transfer funds because it's a transfer operation. Okay, so this is it. We are transferring from the bank and we are taking it to the cash. And how much are we transferring? 100,000. The same thing the journal will give you. That is exactly what transfer funds will also give you. The same accounting result. The important thing is that know where the money is moving from and where the money is going to. Then you can see that QuickBooks has a summarized narration for you. But if you have a longer one, you can clean up this and put yours. So save and close. Yeah. Yeah. Now the next is paid rent by check. Paid rent. So Sky International is paying rent, possibly to his landlord, to the facility managers, to the agent. Okay, you can see that in the question, I intentionally removed name. I intentionally removed name because sometimes too, we can also see our vendors as on the fly. The way we are seen as on the fly when we go to patronize, we can on our own see some of our vendors as on the fly, or we don't even need to put them in our database. The important thing is that the transaction is captured. So this is an expense. How do we capture that? You go to banking menu. You go to banking menu and select write check. Go to banking menu and select write checks, right? So I'll click on write checks. Okay, so the rent was paid by check. The rent was paid by check. So you see that if you notice the way I do my things, I always start from the very beginning. So I'll go to Global Bank, select the medium of payment, how the money was paid to the vendor. Then, now if you notice, the vendor's name is not in our database. So I can just come to address and type facility managers or manager. Facility manager, right? Now, it is not an item, it is a service. So I will remain under the expenditure folder. So if I click on item, the background will turn white, meaning that I want to enter what is quantity oriented. But this is a service-based payment. So I have to click on expense. Now, drop down under account, you go to rent, then select, enter the amount, 10,000. Then make your narration. Because of time, that's why I'm avoiding narration. But please, as a good accountant who understands what professionalism and storytelling is, you must always narrate what that transaction is all about. At least for audit's sake, to save your name, for audit's sake, you must always give a narration. Okay, so I'll save this. Now, the next one is stationaries. We purchased, Sky Investment purchased stationaries by cash. So you go back to banking and select write check. So write check simply means it's a platform that captures all monies being paid out. All monies being paid out. Okay, it's basically from services. So that's the work of banking. Okay, now this transaction is paid by cash. I will change the procedure to cash. The name is not given, so let me say Sahad Stores. Okay, it's not in our database, but I still have a column where I can enter the name. Then you have stationaries, amount 2,000. Then you do your narration. Okay, then save. The third one is bought a motor van by cash from Kia Motors. So we are buying an asset, okay, by cash from Kia Motors. So the same money is going out. Go to banking, write check. Now, because the name is here, I can on the fly add a name. I can on the fly add this name. I want to add this name. I don't want to treat it as on the fly because asset is an important component of the business. So the same thing, the person that sold it to us is also very important. So I'll go to pay to the order of and select add new. So there's always a shortcut in virtually all the features where you can on the fly add a new name. So click on, so I'm creating a vendor. Yeah, I'm creating a vendor. So remember I told you yesterday, when you type in the middle, it will duplicate itself. So capital letter, I prefer it. Kia Motors. Okay. So once you click, it will duplicate itself. So you can see it has appeared both ways. Okay. So this amount is going to fixed asset. That is motor van. Look at it here. Motor van is a fixed asset ledger. So the amount we spent in buying it by cash is 55,000. 55,000, yeah. And it was paid by cash. Very important. The medium of payment is very key. So save and close. Then we paid utility bill to PHCN. So we go back again, write check. So I'm using on the fly to key in the name PHCN. It's also a vendor that provides energy services, PHCN. So he said this name is already in the vendor list. So that means that we created it yesterday. It means that we created this name yesterday. So the system will not allow you to duplicate the same exact name. So let's see if it was created yesterday. Yes, you can see it here. Created it yesterday. So they provide energy services to us. That is utility bill, and we are paying them by cash. So you drop down, select utility. Amount 1,500. Then you do your narration, then save and close. Good. Now, the last expenditure incurred is internet subscription. So go back. Now, and this is what I'm going to do. If you don't want to use banking and write check to capture monies being paid out, you can also use journal. So this last one, we are going to treat it in the journal. It is just the same result you will get. The only difference is that in the journal, you will be the one to decide what to debit and what to credit. But in the receipt or source document or commercial document, you just give the software the details. The software will now debit and credit perfectly on your behalf. So I will use journal to answer internet subscription on 4.5. So go to company menu, scroll down and select make general journals entry. Okay, good. I don't like seeing this. So the meaning of this thing is said assigning numbers to journal. It means that QuickBooks is the one assigning numbers. You can see this number now. I'm going to change the number. I don't want to use QuickBooks 1, 2, 3, and so on. Let me call it, let's say from the approval document, what we have there is 781/90000. So this is what was on the approval given to us, okay, or approved by the management for us to spend such money. Good. So I'll come here now. Internet subscription is an expenditure, okay? So it has to be on the debit side. So I'll select internet subscription of 4,500. Then it is being paid by cash. Now, if you also notice, I did not include the medium of payment. One of the things they taught us in school is that, but I can remember from the mouth of my lecturer, whenever you are given a question and the medium of payment is not expressed, then it means you have to use cash. Okay, so that's why I left it open. Okay, so then you credit cash because asset is decreasing. So anytime asset decreases, you credit. Anytime expense increases, you debit. Then please always remember to do your narration. Let me just chip in this as my storytelling. Okay, so you debit internet subscription and credit cash at hand. Then we are done with this. And good. Then paid salaries to workers. We have 3 workers. They have the accountant, the marketer, and the security man. So we have the accountant is John Edet, the marketer is Flora James, the security man is Gate Peters. So we are going to pay them salaries for the month or for the period we have just run our business. Good. So 2 ways again. You can use write check. You can go to banking and select write check, or you can go to journal, debit salary, and credit the medium of payment. So let's use banking write check. So the first person is John Edet, who is the accountant. So we are paying him by check. So that means it hits our global bank. So I'll come to the pay to the order of and select John Edet, right? Okay, so select John Edet, then pull up salary. Sometimes you can type the name, QuickBooks will call it up. He's paid 7,500. Okay, then save and close. Now, before I do that, now I'm going to make one mistake now, and you notice that QuickBooks, please watch this. Anytime you put a figure here, QuickBooks will automatically reflect it here. Now I'm going to change the figure. I'm going to say put it at 6.5. Now let's save. Let's save and see. Now you have pulled yourself into a problem. So I'm going to call this back. I'm going to call it back and make and introduce something to you. So why I'm calling it back, how to call a transaction back, you use the find these arrow keys. Okay, you use the arrow keys to call a transaction. You see what it did? It quickly changed it to 6.5. Okay, now I've called it back. I want to return it back to 7.5. Now, did you see? Let me post. Did you see? It has refused to post.